Okay, good evening, traders. My name is Raul Rivera. I am the founder of themarketprofile.com. Today is Friday, August 11th, 2017, and this is your afternoon market profile analysis and daily market summary. So today, not a bloodbath, but I did have a losing day today of only $480 before commissions. So a small losing day after a large losing day. Today the idea was to try and short the market anywhere that I could. On the NASDAQ, that was the place, we found value and we did cross above value. But what happened with the NASDAQ is we ended up consolidating right on the value that I pretty much sold. When we take a look at the correlating markets like the Dow and the S&P, those markets had better reactions to the value areas that I was looking at this morning. So let's start with the S&P 500. So this morning, again, we were looking to be more short than long. If we take a look at a 14-day market profile period, there is pretty much zero support, right? This is just blank space out here. And this is where prices are currently at. Okay, so we were used to low volatility, trading sideways. Okay, the market conditioned us that, even though we make new lows in the S&P, we always trade to the highs. New lows in the S&P, we always trade to the highs. New lows in the S&P, trades high. Lows in the S&P trades high, lows in the S&P trade higher. So we went with that mentality yesterday, and for the first time in 1, 2, 3, 4, 5, 6, 7, 8, 9 trading sessions, it actually failed. So today we were looking to be sellers. There's no support in the market in the short term, so the market can, in theory, continue to trade lower. So if there is no support, we can't be buyers. So if there's no support, then there's got to be some resistance. So early this morning, we were looking at a specific level, but this one sort of, after splitting yesterday's sell-off, we can see we have a D followed by a B, followed by a B, followed by a B, and B shapes are selling patterns. Okay, if we look at a B, that's a selling pattern. The idea is that we're going to probably continue to trade lower, retest of the lows, and trade lower. Pretty much, if I had to say it in a term that most people understand, it would be like bearish flags, right? Bearish flags where prices trade lower, consolidate sideways, and then trade lower, consolidate sideways, and then trade lower. It's the same thing, B and B. We're just seeing this pattern of a bear flag. We're seeing the pattern in a form of a distribution. Okay. So B shapes, we want it to be sellers. There's no support, so we want to be sellers. So we break apart the distributions, we find value. And this one I was a little confused about, because we can see the value area high and the value area low in the volume profile, which is this blue vertical line, and then the value area high and the value area low on this black vertical line. So this value area in black is the TPO profile's value area. The blue is volume profile. So usually when we break apart each distribution into its singular distribution, what happens is these value areas consolidate into a small section, and they're very, very close to each other, right? And this displays us where value is in this market, right? At specific prices, where the value is trading and where it traded on its singular distributions. So this one was strange. When we don't look at a singular distribution, let me see if I can find an example here. Here's a great example. Well, actually, no, it's just not that good. Let's see, any other distributions right here. Okay, we could use this profile here. So here we can see, we got the value area high, value area low in TPO, value area high, value area low in volume profile. Okay, and it's not a singular distribution profile. So what I have to do, I have to split the profile into pretty much pieces, right? So there, I'm splitting them, and then I'll split over here. Okay, so that shows me that. again. There we go. So now suddenly I have new value areas, and we have a value area here. We have a value area high, value area low over here, a little bit extra on the top there on the TPO. Okay, and then value area and value area there. Now let me bring them back together. Okay, so notice how each value area gets its own location. Now that I'm combining it all, the value area that we created down here is non-existent. Doesn't mean that it never happened. It's there. We just have to split the profile into its proper forms in order to see it. So the point I'm trying to make is this one is a split distribution, but the value areas are kind of wacky. So we decided to skip this one, but we figured, you know, it might as well try at the value area low on the TPO and maybe take it as high as the value area high. So we were looking at a pretty large average range of 45 to 50, and that's too big for me. That's too big a range. You know, sometimes it's not going to pay off as good as you'd like. In this instance, though, it did do rather okay. It did trade below down to 40. So could have been, you know, even at 45, 5 points of profit, but we didn't take this trade. And the market pretty much traded higher and then consolidated. So we had a split the distributions here. We can see it here. We had a D followed by a P, and just consolidation, trading higher and consolidating at the highs and closing at the highs. Interestingly enough, we did close at the highs, but we did it on negative 7,000 in balance. So there was definitely some selling into the weekend here in the S&P 500. Okay, next up we have crude oil. This one was a late trade, so I mean it literally turned into a scalp. All session long we literally just traded sideways on a D-shaped distribution, and it wasn't until late in the afternoon we started finally traveling higher. So I had two contracts here. We were looking to sell 75 to 85. I got filled on 75 and 85, so average came out to two contracts at 48.80, and ended up selling them just for 2 ticks. I figured, you know what, we're consolidating, D-shaped distribution, we're at the highs, maybe at the 2:30 close they'll try to sell the market off, but looks like that's not what happened. So I only took off the position very quickly. I didn't want to hold it past, you know, settlement trading here in the crude oil market. So getting kind of dark in here. Okay. So all right, so that's crude oil. Only 2 ticks profit on that one. Moving up to the gold market, we were looking to get long, and I think we were just a little bit too good for the market. We were trying to get long 85 to 83. So you can see I still have my orders there, which I should go ahead and cancel.
Order cancel, order cancel, order cancel, order cancel, order cancel.
There we go. So we were trying to buy, we were only trying to be buyers, not sellers. 85 to 83 was the area we wanted to sell. We got very close, but no cigars. This seems to happen to me with gold in this rally that we've had recently. So we're at 96. Maybe next week we'll probably retest and try and go for that 1300 again. Last time we were above 1300 was on election night, so it's been quite a while since gold has gotten to 1300. You know, it might have been sooner than that, but that's the last time I personally remember. So you know, looking at the profile, we had a value area down here. Well, yesterday we have multiple profiles after I split them, which is, you know, really great unique feature of our profile. We had a D followed by a P followed by a P. Find a place to buy it, right? We never were able to buy it. Today, no difference. I mean, you know, over the past 14 sessions, there's literally no resistance. We're at a 14-day distribution high up here, so there's no resistance. There's no reason to sell it. So we were looking to be buyers, and between this value area and this value area is the way we wanted to do it. This value area traded overnight. It respected the area, traded higher off of it. But then we had news, traded lower, and then come back higher. It was a lot of distribution and a lot of trading sideways in gold today. Okay, next up we have the 30-year. I was able to take a trade on this one early this morning. We can see there that was the footprint. So we're gonna go ahead and put the profile view here. Okay, so looking at the 30-year, we had a value area high here, value area high after we split distributions. We were trying to buy 55.08 to 04. I got filled on 2 contracts. Average price was 06. I didn't add any more, but we saw this value area low, this value area low, and this value area here lined up perfectly, and that actually happened to be where support really held, and the low of the day happened right there. So on my trade, I was a little bit too early. Maybe if I had placed some orders down here, could have been an even better trade. But you know, sometimes it's not the way it happens. You know, I trade real time, and in hindsight, that would have looked like a fantastic trade. But you know, when you trade live, you're not trading hindsight. Hindsight trading is an illusion, right? Because you think to yourself that you would have done it, but maybe you really in real time would not have. Just like me right here, I did not add to my position after getting long the 30-year here. So we got long the 30-year, 55.06. The market was trading higher. I could have had at least 7 to 8 ticks. The market traded lower, so I took off 4 ticks. I learned my lesson from yesterday in crude oil, and when you have the profits, take it. So I said to myself, you know what? I have profits in the 30-year. I see the S&P and the NASDAQ and the Dow don't really want to sell. So that's a bad sign for the 30-year. So let me just cut it off, take my profits and run. So I made 250 bucks here in the 30-year, 2 contracts, taking 4 ticks on each of those contracts. Another note that I wanted to mention, I mean, this was as sweet as they came, though. I mean, if we can see, the 50 to 2,000 lot trader here in the 30-year was bid. Okay, they were buying the market, and they were buying it hard. We also saw a positive 14,000 imbalance, so they continued to buy even as prices were moving lower. That's like the clearest divergence that you'll ever want to see. Institutional buying at a 14-day high. Okay, usually if we see buying and the market is moving lower, they're short covering, but the 30-year is at a pretty much a 14-day high, right? See, we're at the highs, and they're buying as the market was trading lower. I mean, that's clear divergence that they were interested in buying the 30-year. So, and as you can see, the market traded higher. They made probably more money than me, but you know, our indicators, they really tell us what the institutions and what the market and the true volume sentiment, which is important. You know, there's a lot of, you know, social media out there. There's like indicators on you know, the sentiment on what people, you know, what stocks people are tweeting or something like that. But you know, just because they're tweeting about a specific stock doesn't really mean that they're buying it, right? So to me, that's kind of like, okay, it's a cool, you know, new way of looking at sentiment in the market, yes. But I'd rather, you know, with my trading, focus on real executed volume. And looking at institutional trading, you know, I see where the sentiment is and where it truly lies just based on volume. So our indicators are able to track institutional volume and show us a sentiment on, you know, what side of the trade they're really going after. Okay, next up we got the NASDAQ. This one took a loser in this one today, so you know, I think I got to take a little break from the NASDAQ. I think it trapped me into thinking the NASDAQ is a great contract, and it is. But you know, I've never really been a NASDAQ trader, so suddenly I start trading the NASDAQ. Everything looks good. I get trapped, and today and yesterday taking some pretty big losers in the NASDAQ. Today, taking a 18-point loser in the Nasdaq, coming out to about a $700 loss here, plus the 250, plus the $40 in crude oil, and I was down about $480 today. So the idea was correct. We were trying to short the value area here, but with the Nasdaq likes to be an outlier every now and again. Something I've noticed for a long time, but figured I'll give it a try. But getting a little bit burnt here on the Nasdaq. It's a little bit of an outlier. If it decides to trend harder than the S&P and the Dow, it will, and it did that today. So we were correct in wanting to sell this value area. Did work out for about 10 points. We were looking to sell it down here where the value area was as a whole for the day. Didn't make it, reversed and then consolidated around all session long. So we took a loser on this one at the very end of the day on the Nasdaq. So, but I just want to show you why the Nasdaq is such an outlier. Okay, in the S&P, we figured somewhere around here to 2450, we want to begin to sell. Okay, we got a value area, so on and so forth. We trade through it, and it actually works, right? You get some decent profit out of the trade here. Okay, let's go over to the Dow. We took a look at the Dow as well, and we're like, okay, so we want to start selling right here in this value area low. And what happened? I mean, we got right to it and never looked back, traded lower. And then suddenly you got the Nasdaq, which is, it in itself, its own kind of, how do I say, its own kind of, its own personality, right? And, we get right to the area, but we consolidate around it, never really traded lower for the rest of the day. And we can see here the 20 lots and greater were certainly long the Nasdaq. So taking another loss here, about 10 times smaller than, and that's a fact, 10 times smaller than the loss we took yesterday. So we were able to take two winners, one in crude oil and one in the 30-year, but the one loss in the Nasdaq kind of dragged me down here. So if we go by the winners versus losers, today was somewhat of a 75% of my trading was winning trades, and then the other 25% being the Nasdaq was my losing. So I mean, percentage wise looks good, more winners than losers, but when it comes down to dollars and cents, I did take a very small loss. And maybe I just need a break. So thankfully we have the weekend coming up, so I'm gonna sit back, relax, try not to think about trading in the markets, and come back refreshed with some, just breathe in some fresh air, and come to the market with a clear mind when we get back bright and early Monday morning. So guys, if you like this video, please click like on the video, and if you have any questions at all on the market profile and the tools that I use, please feel free to comment on the video. And also, if you'd like to join us every single morning in the live trading room, the most important hours are 8 a.m. to 9 a.m. Eastern time. We go over all the levels we're trying to buy and sell. We analyze the market profile, we find value, and I place my trades in front of everybody live every single day. You can sign up on www.themarketprofile.com and claim your 14-day free trial. Thank you guys for watching. I hope everybody has a great weekend, and I will see you all bright and early Monday morning. Take care, everyone.